Good evening, viewers, and you program Stock and Shares. On the program this evening, again, like we did promise you last week, one of the things that we'll be doing in the new week has to do with issues that ordinarily will be considered as tangential or not too significant as far as the market is concerned. But as we then deal with them, you begin to understand, yes, they may look small, but they're basically important to the future of our market. So on that note, we'll be looking at how well did 2021 perform in terms of velocity. And if you're wondering what has velocity got to do with the capital market, this itself is one of the measures that helps to understand how companies basically make money. Because if also we have situations where companies are not making money, one of the things that then you begin to find is that people begin to look out for ways of cutting corners. So we'll be looking at the velocity, and interestingly, we can confirm to you that 2021 turned out to be the lowest in 15 years. But that is not all that we'll be sharing with you on the program this evening. For our first-time viewers, we also will encourage you to use any of the two platforms as basically a way of making your contribution to the program that is in 16 years already. And the reason that this is important, be it by SMS or by email, is that it helps us to refresh and renew the program. That way, the benefit also comes much more to our viewing public. And talking about renewal or refreshment, one of the things that we'll be bringing back on the program this evening has to do with returns in terms of long term. 10 years is considered long term. 5 years may not be that long, but both are things that we'll be bringing on the table as a way of further expressing the performances as far as our market is concerned. Talking about our regulars, two companies on parade. Again, two interesting ones, but we'll also be leaving you to make judgment at the end of the program. But one of the things that we'll be talking about on the program this evening is the issue of expected results for 2022. One of the things that the market also prides itself in is the fact that the market has harvest periods, and harvest periods are periods when result comes in and companies begin to say, this is the return that will be coming the way of investors. So we'll be looking at some companies, few of them, whose results will come in between now and next week, Monday. And then on Tuesday, we'll be telling you results that will also be coming in the upper week. But one thing is certain, quite a number of 2021 results will be rolling in from next week. But it's important that we prepare your mind because this itself is beginning to reflect as far as the market is concerned. I'll be telling you much more in the course of the program. It's also on that note that I'll be asking that you permit us to take the first break. When we come back after the break, I will have much more to tell you. Please stay tuned.
For 3 decades, people world over have improved their health and well-being by its rich ingredients. A unique blend of essential amino acids, multivitamins and minerals specially formulated to combat stress and fatigue. The golden promise of Astamine is being enjoyed by more and more people who have found the deepest secret of living life at its peak. Astamine. Get healthier.
in today's fast-paced, high-stakes, make-or-break world. You need every edge you can get to help your business succeed. That is why we've designed the new and improved Sterling Pro. We've made it even more flexible to adapt to your enterprise, no matter the size. And we've also upgraded the security to make your business transactions more secure. And now more than ever, you can now get even more done with one premium solution. Get the extra edge to succeed in today's competitive world with a solution that's built for your business. Visit sterling.ng/pro and let's get your business ahead.
Welcome back, and if you just join us, the program is Stock and Shares. Let's look at how the week did finish, and that itself will be tying up as to how the trade did end today. First, we can confirm to you that from all indications that the market rallied to finishing positive, notwithstanding the fact that the last trading day of the week also recorded a dip. And looking at the chart that we'll be sharing with you in a moment from now, first we can confirm that less than 2 billion units of shares were traded in the week. To be exact, only 1.6 billion shares were traded, and that is, however, translated to over 32.7 billion naira in a week that recorded 1.37% climb. But in all, you will find that 2021 was the last time that, in terms of volume, that the market recorded over 2 billion. This itself is following on the heel of what 2020 did in both years, doing over 2 billion. Before then, the last time that the market recorded a climb of over 2 billion was in 2018, which itself came in after 5 years of less than 2 billion. So 2018, 2013, and then 2011, 2008, and then 2010 were the 7 years that the market recorded over 2 billion in terms of volume traded. But in terms of value, it's only in 7 years that the market recorded over 20 billion naira in terms of value traded. And in this instance, again, you will find 2022 then came on the table to then have 2020 to 2022, 3 straight years of the market recording over 20 billion. 2019, interestingly, became the break. Otherwise, what will have also happened, it will have been 2018 to 2022. However, 2018 had 2011 and 2008 joining. Interestingly, in 2008, the volume traded happened to be 4.22 billion, and in terms of value, 70.8 billion, which itself remained the best performing since 2006. But 2008, like we just told you, didn't stop at the fact that it had only 2 billion plus being traded and over 20 billion naira. It did fail the test in terms of index because 2008 turned out to be negative by 1.22. But that wasn't the case with 2021, 2020, and 2018, as well as 2011. So we had 5 years finishing, crossing the two hurdles of volume and value. However, 2021, 2020, 2018, and 2011 also did cross, just 4 years did cross the 3 hurdles of 2 billion, 20 billion naira, and also finishing positive. Like I said, in terms of volume, in terms of value rather, 2008 with 70.8 turned out to be the best, but in terms of volume, the 5.02 billion that was done in 2018 also remained the best in the last 16 years. If you then take a look at this more detailed picture going by the index trend, what you will then find, that chart will come any moment from now, what you then find is that the market also had been performing zigzagly, if you don't mind, in terms of the direction of the index. Yes, 2022 did look relatively above average in terms of finishing positive, and that itself basically explains why the insurance subsector had 3 straight years of 2019 to 2021, just like the main sector that also had 3 straight years, 2019 to 2021, being negative, just like we also had the pension subsector and the consumer subsector also posting 3 straight years of being negative between 2019 and 2021. The consumer subsector, ironically, in 2022 continued to remain negative, hence taking it to 4 straight years in terms of the direction of the market, and then closing in terms of yield to date at a negative of almost 5.2. Similarly, the insurance subsector also picked up its 4th straight years of being negative, pushing it from 2019 to 2022. But it must also be mentioned that for the insurance subsector, it also had done a zigzag, like we mentioned earlier, between 2011 and 2014, doing 2011 being positive, 2012 negative, 13 positive, and 14 negative. But don't also forget the fact that in 2022, ironically, what we have is a situation where the NSE 30, the banking subsector, oil and gas, the industrial subsector, pension, and main market basically finished the 2nd consecutive week in 2022 has been positive. And what that itself then means is the fact that the main market, with a yield of 6.29%, happens to be the best performing sector currently, while the consumer subsector, with the yield to date of 5.19, like we mentioned earlier, haven't also picked up the 2nd consecutive drop in 2022, alongside insurance and Lotus, happens to be the worst performing sector currently. But while the chart is on, let's quickly mention that in 2021, we can confirm to you that Transcorp Hotel did offer a right issue at 3 naira 76 kobo. This itself is coming in almost 4 years after Mayor had a right issue at 75 kobo, and UPDC had a right issue at 3 naira. But let's then close this segment on the note as to how the market generally finished in terms of direction. Yes, we've told you which sector did what, but it's also important to mention in the next chart that for the 2nd consecutive years, we had a situation where the inactive companies basically remained below 100. That chart should come any moment from now, because in 2022, we had a situation where 88 companies basically finished without any movement in the year, though the market did close down on the last trading day of the week. But in 2021, that had the market close positive on the last trading day of the week, we had a situation where 82 companies basically did not record any price changes. Similarly, 2018 was the other year in which the market also did below 100 in terms of number of companies that basically didn't take any position as far as the market is concerned. But let's also mention that, interestingly, because we'll be talking long term. But the teaser is that in the last 5 years, we've had a situation where the market capitalization had gone up by almost 15 billion. Or if you like, that itself represents a 170% appreciation in terms of market capitalization. But we'll be talking about it much more. But if you then convert this on a year per year basis, it also means that the market, from the perspective of the market capitalization, recorded an average of 33% in the last 5 years. It's on that note that we then take another break. When we do return after the break, we'll be sharing with you the companies that helped to push the index up in the second week of 2022. Please stay tuned.
There is a reason Africa is called the new frontier. What was once potential is now an opportunity ready to be seized. Once revered for our resources, today's wealth lies in our people. People who build the cities that shape the future. People who know an idea in one place means business in another. A generation for whom technology means there are no borders, no boundaries. We are the new lions in a brave new world, kings of the urban jungle. And there's a bank that puts the world in our pocket and the future in our hands. UBA, Africa's global bank.
For every uncertainty that life presents on a daily basis, there is only one cover you can be sure of: the Sovereign Trust Insurance PLC cover. We have all it takes to give you the assurance that life can be perfect, even in the midst of uncertainty. Come under our cover today and put life's uncertainty behind you. Sovereign Trust Insurance PLC. We've got you covered.
You're welcome back. And if you just join us, the program is Stock and Shares. Let's start the week's performances on the note of how the smaller markets, if you like, NASD, did finish. Our first 3 companies basically rallied to a climb, as against 2 companies finishing in red. WAMCO, with a 43 kobo drop, did go down by less than 0.4% in terms of market capitalization. And interestingly, at the end of market today, WAMCO did close at 118 naira 30 kobo. For double one, it went down by 7 naira, and that meant almost a 3.3% depreciation in terms of market capitalization. At the end of trading today, the share price did close at 208 naira. For CSCS, it went up in the week by 95 kobo, picking up almost a 5% jump in terms of its market capitalization. However, at the end of trading today, it did drop 10 kobo to close at 19 naira 90 kobo, while Niger Delta dropped by 3 naira to close at 235 naira. But in the week, it did go up by 2 naira 50 kobo. That also meant that it picked up almost 1.1% improvement in its market capitalization. For NIPCO, 3 naira was all again, and that fetched it almost in a little over 9.5%. But at the end of trading today, we can confirm to you that it did drop by 6 naira 90 kobo, and it will be opening the market tomorrow at at 62 naira 10 kobo. But for the NGX, by the way, before we leave the NASD, we can also confirm to you that despite the drop by the two companies mentioned, we had a situation where the index did go up by 0.97% and taking the yield to date to 0.53. And with CSCS, WAMCO, Niger Delta, NIPCO, and Double One dominating the sector or the exchange that had only 41 companies. But in terms of value, CSCS, Niger Delta, WAMCO, Double One, and NIPCO did finish top in that order. But for the NGX, it's a case of two outstanding companies against the rest of the market. The week had 33 companies appreciating in price in the week under review, and that also had 8 companies out of the 33. That chart should come any moment from now. But what that also then brings to the fore is the fact that surplus rallied to a 25 naira appreciation. This itself is on the heel of a 15 naira gain that I posted the previous week when it finished as the second best performing company. For Dangote Cement, despite the share buyback, Dangote rallied to a 20 naira appreciation, and notwithstanding dropping 5 naira on the last trading day of the week, that also had 16 other companies along with it. The previous week, Dangote also had dropped by 7 naira when it finished as the seventh, as the worst performing company in that week. Boa Flowers, or Boa Foods rather, are still riding high, picking up a 12 naira 80 kobo in the week, and that also meant that in terms of market capitalization, I did go by 24.1%. Ironically, the previous week it was up by 13 naira 20 kobo when it finished as the third best performing company. But at the end of trading today, it rallied to another 2 naira 60 kobo to close at 64 naira 40 kobo. Guinness went up by 2 naira 30 kobo, a distant fourth. This itself is an improvement over the 90 kobo gain that I posted the previous week when it finished 9th. For MRS, MRS went up by 1 naira 20 kobo, 20 kobo better than Julius Berger, but Julius Berger's position was made good largely by an 80 kobo gain that I posted on the last trading day of the week. Interestingly, in that trading day, only 14 companies did move up in share price. Julius Berger was coming in from a 55 kobo drop the previous week when he finished 5th. Fitsin Healthcare, 13.6% leap. That was what he posted in the week, having gone up by 90 kobo. Ironically, 66 kobo of that was on the last trading day of the week. The previous week, the company was also up by 38 kobo when it finished 14th. But at the end of trading today, Fitsin Healthcare picked up another 25 kobo to close at 7 naira 55 kobo. While Vitafoam, that dropped by 2 naira 25 kobo the previous week, finishing at the second worst performing stock, partly recovered with a 75 kobo appreciation, while Eternal Oil also did pick up a 50 kobo appreciation, itself an improvement over the 6 kobo that I picked up the previous week. But at the end of trading today, Eternal Oil added 35 kobo to its share price and will be opening trade tomorrow at 6 naira 35 kobo, while PZ, having been adjusted for the 25 kobo dividend for 2021 accounting year, 2020-2021 accounting year, the company picked up a 45 kobo climb. This itself is lower than the 60 kobo that I posted the previous week, though it finished 12th. Like we mentioned, we had a situation where 8 banks finished out of the 33 companies that appreciated in share price. However, they were all below the top 10 in terms of their positioning. But at the end of trading today, we can confirm to you that Dangote Cement didn't pick up as much as Boa Cement, because Boa Cement rallied to a 1 naira 40 kobo appreciation to close at 71 naira 40 kobo, while Dangote Sugar picked up a 1 naira 25 kobo to close at 18 naira 25 kobo. Similarly, Starco went up by 35 kobo, and that means it will be opening the market tomorrow at 5 naira 83 kobo, while GT Holdco picked up 35 kobo, and that also meant that it closed at 25 naira 50 kobo. ETI, on the other hand, picked up 30 kobo to then hit a 9 naira close. On the downside, what you will find is a situation where 35 companies also did drop in price, and that itself also indicates that the sizes, or rather the second indicator is that the sizes were also smaller. Let's confirm to you that Nestle did drop by 121 naira 50 kobo, and that meant a 7.8% drop in its market capitalization, to leave MTN a distant second with a 7 naira drop. Nigerian Breweries did finish a distant third with a 2 naira drop, despite the company picking up a 50 kobo gain on the last trading day of the week. The previous week, the company was down by 2 naira as well. NGX was down by 1 naira 35 kobo. 25 kobo of that was on the last trading day of the week. The previous week, the company was up by 1 naira 30 kobo, and that itself, it tries to go back to at the end of trading today, but manage with only a 25 kobo appreciation, and will be opening the market tomorrow at 19 naira 65 kobo. Beja Paints picked up a 40 kobo gain on the last trading day of the week. Oh, sorry, at the end of trading today to close at 8 naira 15 kobo. But the company itself in the week did drop by 85 kobo, and that meant almost a 10% drop in its market capitalization. Unilever dropped 80 kobo. The previous week, it did drop 50 kobo. Custodian dropped 75 kobo, just like Flour Mills of Nigeria. But Custodian, at the end of trading today, picked up a 10 kobo gain to close at 7 naira 25 kobo. While Northern Nigerian Flour Mills, like corn oil, did drop by 70 kobo. But Northern Nigerian Flour Mills drop amounted to a 9.7% dip in its market capitalization, and the previous week had dropped by 75 kobo. But for corn oil, it picked up the 75 kobo, a 65 kobo gain at the end of trading today, and will be opening the market at 21 naira 95 kobo. In all, 13 companies also dropped price at the end of trading today. But what we can confirm to you is the fact that NEM dropped 33 kobo. Again, the impact of reconstruction, and will be opening at 3 naira 63 kobo, beginning the market tomorrow, while Lafarge dropped 10 kobo, and also means that it did close at 25 naira 50 kobo. But let's quickly mention that the 35 companies that dropped in the week happens to be the 10th time in 18 years that the number of companies that dropped in terms of share price is greater than the number of companies that appreciated in share price. Because if you remember, 35 companies dropped in the week, and 33 companies only appreciated in the share price. But taking the matter further and looking at how all of these ended up in terms of volume traded, don't forget one of the things that we talked about in the introduction or in the first segment is to say that only 1.6 billion shares were traded. But we can confirm to you of that size, Transcorp picked up 400 million, a little over 400 million, to leave Boa Foods with 257 million finishing second. The top 15 companies had 12 financial sector based companies, that is companies either in the insurance subsector or in the banking subsector. And in the lower segments, To complete, the number 15 happens to be Sovereign Trust finishing 13th with 26.2 million, ICO finishing 14th with 24.75 million, and Sterling finishing 15th with 24.5 million. For the big value, again, that is where the boys got separated from the men. Out of the 32.72 billion traded, we can confirm to you that Boa Foods did finish with a 16.1 billion naira, to then leave the second finisher a distant position, because only 2.6 billion was transacted by surplus. So we had a situation where 44 companies traded over 20 million in the week. But of the 44, 13 of them happens to be in the banking subsector, and only one in the insurance subsector. And 4 banks happen to be in the top 10. And like you can find on the screen, you find that GT Holdco, FBN Holding, Zenith Bank, Stanbic, IBTC, and Access Bank basically did finish in the top 12, but in the top 10. So that is basically the picture that the week also had to offer in terms of the performances as it relates to the market. It's also on that note that we then take another break, and when we come back after the break, I will be sharing with you the companies whose results are likely to be in another 7 days. Please stay tuned.
My family is about to have the best mian taushe they have ever tasted. How do I know? My new Dangote seasoning cube brings out the best flavor.
The new Dangote seasoning is just perfect for my mian kubewa. The aroma and the flavor is simply amazing.
Mesuya, why is suya too sweet like this?
Since the time I use them for Dangote seasoning, I put them for my edge. Then they make my suya correct, they on point. That is why I see people that they even come buy this suya all the time. They come.
Mesuya, give me 200 naira.
Do I want you to be done pass 200 naira, pa?
Introducing the new Dangote seasoning to give every meal that rich, distinct taste and flavor that your whole family will love.
To the left, and to the
The new Dangote seasoning cube is the real deal. Try it today.
As you adjust to the new realities for operating your business and engaging with your customers, let us help you transform your business into a digital powerhouse capable of adapting and taking advantage of today's opportunities. With our best-in-class array of digital solutions, you can conduct your business, receive payments from your customers, and perform transactions quickly, safely, and conveniently, because we've got you covered with the right people, technology, and service offerings. Contact us today and let us take your business to its zenith. Zenith Bank, in your best interest.
You're welcome back. And if you just join us, the program is Talk and Share It. Again, one of the things that we have decided to bring back, largely as a result of the messages that we've also received, has to do with the long-term return table. First, looking at the chart, again, for not too long followers of the program, one of the things that you'll find is that we have the 10 years for 2012 to 2022, and then we also have 2017 to 2022. And what this will be helping you to do is to understand if you were to stay in the market and in a sector or if you have stayed in the market in a sector for the last 10 years, you have basis of assessing what return that the company that you have invested in, how well it has done. So starting with the 5 years, you'll find that for the all share index, which is a broad index, what you will find is that the market itself did achieve almost a 68.9% gain or appreciation in 5 years. But if you then step back and take the position in the last 10 years, what you will find that the broad index has done 113.3 in the last 10 years. And if you then do the math, what you will find is that on a year-to-year basis, your investment is expected to have done a little over 11% per annum, while in the last 5 years, what the performance will be slightly lower than that. Okay, but if you have your investment in the basket where you have the NGX 30 in the last 5 years, 48%, less than 48.1% is what the total gain will mean. But in the last 10 years, you're expected to have done, or your investment in that sector is expected to have done almost 85.5%. However, for the consumer subsector, the story is different because the last 5 years has done better than in the last 10 years. Almost 18.3% negative, which itself is better than a 65.4% negative. For the banking subsector, 10 years investment in that sector with almost a 54% appreciation is a better result than a 47, almost 48% in the last 5 years. But on a year-to-year basis, then what you're going to find is that your return in the last 5 years will give you a better year-to-year basis. Similarly, the insurance subsector, your last 10 years hasn't done as well as the last 5 years has done, and this itself is not unrelated with the issue of share reconstruction and share consolidation. But even at that, both periods have done relatively well, though below the 10-year general market average and the 5-year general market average. Oil and gas, 21% in the last 5 years and almost 58% in the last 10 years. But the figure that you will find on the screen is indicating that the industrial subsector has only a 5-year position, because that indicator came in less than 10 years ago. Same for Lotus, that has a 67.9% in terms of return, no comparison for the last 10 years. The emerging market basically threw up what a number of persons will be wondering, other than the consumer subsector, a negative return of 44.25%. And one of the ways to also explain that is that under our corporate results segment, one of the companies that will be showcasing will help to further explain why that position is so. But the pension subsector, almost 100% in the last 5 years. The premium sector, 155%, and the main market, almost 58%. This itself is an indication that the premium sector that have the elite companies have also done far better than the general market. But if you then relate all of this to how well the market has done and how all of this also affects the the operators in the market, and in this instance, the stockbrokers, then you begin to also understand better why a number of stockbroking firms also have a challenge. That chart will come any moment from now. First, you will find that in terms of velocity, velocity is basically the relationship within what value was traded in any particular period versus the market capitalization, just a relationship really. But that relationship basically determines how well the companies run in terms of their shares relative to trading. And this can be looked at from the point of a transporter. If you are able to take full capacity either in your aircraft or in your ship or in the bus, and you make a return trip, the chances are higher that you make better profit than a man who probably has done just one trip, or a man who has done 2 trips without full capacity. So the same thing, this is basically an indicator that is similar to that as far as the capital market is concerned. But looking at the chart, you will find that for the second consecutive years, the market is down less than 5%, which means for every 1 share in the market that goes through trading, what it then brings is less than 5 times in a 100 trip. Okay, so if the aircraft was to fly Lagos Abuja 100 times, the performance in 2022 and in 2021 and 2020 is that that aircraft did less than 5 trips, which means the idle time is high. That is the way to be explained in the aviation subsector. But for the capital market, that also means that the brokers will not be in a position to make good enough money to be able to cover their operations, other than the top 10 very many times, or the big players in that sector, because what experience have shown very many times the top 10 dominate over 60% in terms of value, week in, week out, averagely, as far as our market is concerned. That may itself be indicating that there is need for further deepening of our market. But let's close this segment on the note of the companies, because I know that that's where a number of persons will be much more interested in as far as this segment is concerned. Which companies will be hitting the market with their results, expected results? Again, in the period of harvest, this is one area that we've also introduced in the last 4 years. First, United Capital full year results should be in the week under review, while Ikeja Hotel's results is also expected to be in between today and the next 4 trading days. And then for Living Trust, yes, a mortgage bank, it is not certain that even when the board will have approved, the best that Living Trust may be offering the market is that it will be offering the 4th quarter unedited, but that itself will be giving an indication as to what the company is likely to do. But like I mentioned, starting in from next Tuesday till the following Monday, that is where the action point is going to be. But this is basically an appetizer. But it's important that for you to have a good meal, it will be necessary that you start with an appetizer. And it's also on that note that we'll be taking another break. And when we return after the break, we'll be looking at corporate results. Please stay tuned.
Wale Kadri. I'm the Executive Director, Technical, ICO Insurance PLC. ICO has been in existence for 55 years, and we have track record. In this market, we are known by a lot of multinationals. In terms of claim settlement, in the industry, they know also that settle claims within 24 hours, within 48 hours, because we have the financial muscle and we have the technical skill, capability to do it. In terms of branch network, we We have presence in so many states. We also give them best of services. So that's what we stand for as ICO. We are always there and there's a claim from our clients. We've been supporting various businesses for a long time and we'll continue to do that.
How easy it would be if your bank was part of your life, sort of like an assistant, a buddy, and a plug.
Alert, you there?
Always alert, sir.
I see what you did there. Am I up to date? What was that?
Your repayment has just been done. By the way, I found a cheaper ticket for your flight.
Awesome. Schedule my run for 7:19 a.m. tomorrow. I missed it this morning.
Already done.
What else?
Grocery shopping. The list has been sent to your phone.
Perfect. Anything else?
All done. Just get ready for your date.
All right, cool.
Welcome to the future of banking. Alert. Simple, reliable, and convenient. A smarter way to bank.
You're welcome back. And if you just join us, the program is Stock and Shares. I'm talking about the two companies on parade, starting with the first one, John Holt's PLC. Interestingly, John Holt used to have a twin brother, and that twin brother happens to be John Holt Investment. But all of that changed following the merger of the two companies. But for John Holt's PLC, top line 12 months ended September 2021 versus 12 months ended 2020. In 2020, the total revenue by the company was 1.8 billion. By 2021, it dropped to 1.2 billion. However, in terms of profit after tax, it was a loss of 341 million in 2020, and by 2021, that figure rose to over 508 million. And what that then means is that for almost every 1 naira that John Holt sold, he made a loss of almost 50 kobo. And that basically explains why, in terms of earnings, negative of almost 88 kobo in 2020 to 131 by 2021. No dividend, no bonus, and the waiting period for both periods remain infinity. But what you also will find, interestingly, with the company is that this is the 6th loss after tax in 10 years. In the last 10 years, the company had made a loss 6 times. In the last 5 years, it has made a loss 4 times. And interestingly, this is the 2nd time in 3 years that the company is also making a loss. So the only profit in the last 5 years happened to be the profit that was made in 2019. But much more of importance is that in terms of revenue, the revenue has remained less than 3 billion in the last 8 years, and less than 2 billion in the last 3 years. So which means that 2019 to 2021, the companies have made less than 2 billion in terms of top line. If you then look at the share price that closed at 72 kobo in 2021, which is also the current position in 2022, it's coming in from a situation where for 10 years the share price of the company was on the decline. Starting with the decline, however, didn't start in 2004 because in 2004 it did close at 99 kobo, then climbing to 1 naira 47 kobo in 2005, and in that year the low happens to be 58 kobo, just like in 2004. By 2006, it dropped to 1 naira 21 kobo, and the low in that year happens to be 78 kobo. And by 2007, the share price jumped, hitting a 4 naira 49 kobo, though the low in that year was 1 naira 15 kobo. By 2008, the company has started, did hit a high rally of 23 naira 95 kobo, though the close of that year happened to be 13 naira 95 kobo, and then the drop then setting, dropping to less than 10 naira in 2009 at 9 naira 28 kobo, dropping further to 8 naira 82 kobo by 2010. By 2011, it had dropped further to 5 naira 89 kobo, dropping to 3 naira 40 kobo by 2012, and then 1 naira 12 kobo by 2013. And interestingly, in that year, it turned out to be one of the top 10 worst finishers, dropping 67% as against 44% in 2012. But by 2014, the share price was below 1 naira at 98 kobo, 92 kobo by 2015, 66 kobo by 2016, 50 kobo by 2017, 44 kobo by 2018, and then by 2019, it started to climb. 56 kobo, then dropping back to 51 kobo by 2020, and like I told you earlier, 72 kobo in 2021 and 2022. The second company, a classical demonstration as to why the emerging markets have remained on the decline in the last 10 years, like we told you earlier. For Chelarams, the top line, interestingly, moved from 3.6 billion in the last 12 months ended September 2020, as against 8.4 billion by September 2021. However, the loss after tax of 3.5 billion in 2020 turned out to be 3 billion by 2021. And that basically explains why the reduction in the color of red, as against an earnings of 481 kobo negative in 2020, it was 417 approximately in 2021. But the 3,160 shareholders have also had to watch the company doing 15 straight years of being on the decline in terms of share price. And taking it from 2008, what you will find that in 2008, the share price that came from 12 naira 36 kobo in 2007, climbing to 22 naira 36 kobo by 2008. By 2009, the share price had dropped to 14 naira 13 kobo. But don't forget that the high in 2008 was 32 naira 41 kobo. So by 2010, the share price has gone below 10 naira at 7 naira 60 kobo, dropping below 7 naira at 6 naira 31 kobo by 2011, below 6 naira by 2012, when it closed at 5 naira 71 kobo. By 2013, it was less than 5 naira at 4 naira 15 kobo. By 2014, it was less than 4 naira, doing a 3 naira 95 kobo, remaining at 3 naira 58 kobo by 2016, 3 naira 41 kobo by 2016, and then 3 naira 8 kobo in 2017 and 18, before doing a sub 3 naira in 2019 at 2 naira 78 kobo, and then dropping further to 2 naira 51 kobo by 2020, and then 2 naira 24 kobo by 2021, and then by 2022 is currently doing a 2 naira 4 kobo. So it's a case of 15 straight years of the share price of Terrams being on the decline. But this itself took up in 2004 at 1 naira 71 kobo before dropping to 83 kobo in 2005, and then it climbed to 1 naira 59 kobo in 2006, and by 2007, like we told you, it did close at 2 naira 26 kobo. So that is basically the story of the two companies on parade talking about corporate results. It's also on that note that we'll be taking another break, and when we return after the break, we'll be sharing with you the almighty company of the week. Please stay tuned.
There is a reason Africa is called the new frontier. What was once potential is now an opportunity ready to be seized. Once revered for our resources, today's wealth lies in our people. People who build the cities that shape the future. People who know an idea in one place means business in another. A generation for whom technology means there are no borders, no boundaries. We are the new lions in a brave new world, kings of the urban jungle. And there's a bank that puts the world in our pocket and the future in our hands. UBA, Africa's global bank.
You're welcome back. And if you're just joining us, we are basically at the tail end of the program, because what we'll be dishing you now is basically the sweetener. And that sweetener happens to be Sunu Assurance PLC as the company of the week. And if you're wondering why, in the week, the company went down by 7 kobo to close at 31 kobo. This itself is following a 3 kobo loss on the last trading day of the week, which then means that in terms of drop, it did go down by almost 19%. But post reconstruction, it means that any investor that was in the company when it was 20 kobo, adjusted 5 for 1 to 1 naira, is currently losing almost 70% of the value in that investment. Don't also forget the character that the insurance subsector has shown in the 5-year and 10-year posture. So it's on that note that we want to especially thank you for being part of this program. God willing, next week we'll be back better and stronger. See you then.
Honey!
Daddy, please, can I go out with you and Mommy tonight?
Sure thing, sweetie. Get your shoes and we go.
Promise?
You have my word.
Daddy!
You know I wouldn't leave without you, my princess.
There's nothing more important than a promise. We are Fidelity. We keep our word.